What is up, you guys? In this video today, I am going to be going over the absolute best REIT that you can buy in the stock market today. So you know what? Let's just get into it. Things I want to mention. The first thing that I want to mention though is there are down in the description box below timestamps. I've been putting those on my videos recently, you may have noticed, but basically you can jump to kind of where it is that you want to see what I'm talking about, or obviously, you know, I would greatly appreciate if you just watch the whole damn thing, but there are timestamps down there for you. And if you are new here, what is going on? My name is Nikki. You would mean the absolute freaking world to me if you would consider subscribing by hitting the NB in the bottom corner or the OG red subscribe button right down there underneath the video. Join the crew, join the journey. I post 2 times a week minimum on this channel, all about money, investing, side hustles, the journey of life, enjoying life, having fun, and making money. So if you're into that, or if you just enjoy hanging out with me literally half as much as I enjoy hanging out with each and every one of you, please consider subscribing. First, before we get into the nitty-gritty of the actual stock that I want to mention to y'all, I want to kind of tell you what a REIT is. I mean, if you've been in the investing game, you probably know. If you haven't, then I'm about to tell your ass. A REIT is a real estate investment trust. It's a real estate stock. They're companies that own a portfolio, so like a amount of properties and mortgages related to those properties. Some can be very niche like, so the market for one REIT can be like nursing homes and like older people homes. What the hell they call that? What the hell? It's not an older person home. Is it? Shame on me. Or like another company could solely be on like warehouses and industrial spaces. Another one could be offices and corporate spaces. A REIT is a beautiful thing because it gives you as a shareholder an opportunity to put your money into actual real estate, like tangible asset. Like you could go rub the side of the building if your freaky self wanted to do that. And if you are an investor thinking about investing, or you're watching this video because of investing, you probably thought about real estate investing as well. Maybe, I don't know, I have. But here specifically in Southern California, it's very expensive to get into real estate and getting rental properties and all that kind of stuff. You have to have a big amount of money for a down payment. So REITs are a very, very cool way at a low overhead, like a low cost, to get into the real estate industry. Some would argue that it's actually more passive and less overhead, less risk, because you don't have to pay the expenses. You're not getting called at 2 a.m. by the tenant because there's a busted pipe in the bathroom. Like, you just put your money there, get the dividends, and like life is good. It's extremely passive, but you are in the real estate game. So REITs are a little bit different than the common stock that's like publicly traded on the market for tax reasons. A REIT is a specific group that the SEC, or Securities and Exchange Commissions of the federal government, regulate these companies and these types of stocks, and they require them to pay 90% of their taxable income to their shareholders. So we as shareholders and dividend recipients of these REIT stocks, we are going to be taxed a little bit differently than like a normal dividend from like a Coca-Cola or a McDonald's. I'm not going to go into depth about the whole taxes of it. If that's something that you want to see, let me know down below. Maybe I'll whip up a video about it. I will though put a link to an article that Simply Safe Dividends, I believe, put out about taxes and REITs and how it works. That is linked down in the description box below if you want to check that out. But essentially, we're going to get taxed at like an ordinary income at our marginal tax rate as a shareholder. But if you go to this taxation of REITs part and you really kind of go through this and you read this, that you can see like kind of how it's categorized, how you determine the taxable amount. But basically, this is the part that you're going to want to read to kind of become more familiar with the taxation of a REIT. It's really not a huge deal, I don't think. I mean, I don't know. I ain't no pro. So the stock that I believe is the absolute no-brainer best bet for you to buy, at least right now in 2020, for the REIT category, should be absolutely no damn surprise. But that is going to be Realty Income. You guys, if you watch, which I'm sure you do, a ton of other stock channels, I guess, investing channels, people, you know, they all talk about Realty, honestly. Like, every single one of us has it in a portfolio. It was a recent acquisition, girl, what are you in Harvard? It's a recent acquisition. I plan on adding more. It's been dropping a little bit lately. I'm kind of in this like I'm waiting and see kind of thing, which you really shouldn't do. Every week put money in there, but I'm just kind of waiting to see what's going on. The market's crazy, y'all. The market just she wild right now. So Realty Income is trademarked the monthly dividend company. It has amazing history, financials, portfolio, all that stuff. And I had a couple of requests to go in depth about why I love them so much, so that's what I'm going to do. And so let's just hop right into the little details. All right, y'all, so I'm gonna go ahead and pop realty income up on the screen for you here. We can see what it's currently trading at. We can see in the last year it's down about 16%, so it does kind of maybe put in your brain it could be a good opportunity to buy it right now. Before the whole Rona situation, I mean, it was trading in the low 80s, high 70s. If you come down here, you can see I only have 2 shares. Like I said, I want to add more. The fair value by Morningstar, because I do pay for Robinhood Gold, and I do think it's worth it if you want a little bit more data to kind of compare. It says the fair value is 65. Nobody's really complaining about this company, let's just put it that way. I'm going to actually put up now my Wall Street app. I told you guys before, I use this a lot of times. I do pay for it, so it's not free, so you know, I'm sorry about that. A few key things I want to share with you guys on this itself. They also are saying it is undervalued, but they have a fair value of $97. So it kind of just makes you go to see, like Robinhood was said, what, 65? This is saying 97. I mean, I wish it were 90. That 97 would be dope. You'd have to crunch a lot more numbers and do more things that we're not really getting into right now, but the current price, let's just say, is a pretty good deal, I think, right now. And as we cruise down this app, we can see earnings and revenue history on the upward trend here. We can see right here it says O has high quality earnings. If we look at the last year of earnings growth, I mean, look at it compared to the market in the industry. It's way higher. If we go down here, we can see all these green check marks. Now let's go to what this company is really known for. So it's dividends. Check it out. They have a 6 out of 6 for their safety, according to Simply Wall Street. They pay, according to them, 4.78%, and it is a monthly paying, obviously because of the trademark name, but in case y'all didn't hear me the first time. I also want to note here that its dividend is higher than the bottom 25% of the dividends in the market. Cool, but the more important one is O Dividend is in the top 25% of dividend payers in the US market. And then another very important factor when I look at a dividend company is that payout ratio. It is at an 82%, but I'm really like not concerned. Normally I like a 60 or less, but I'm not scared by that. And the future projections, obviously we don't know, but they are saying it's really not going to change. So I think it's solid, and I'm going to go into a little bit more depth as to why I really love O Realty. All right, now y'all know how I feel about stats and number and data and financials of a company. Obviously extremely important as an investor to understand that, but I also am a firm believer in just being confident in the company and business that you are putting your money into. If we looked solely at their history, I mean, their dividends are insane. They're set for success. They've been doing this a very long time. They are good. They are historically sound. And I will be the first to say, I'm probably not really, actually, I'm probably not the first to say, but I am going to be one to say commercial, specifically commercial real estate in a time like we're seeing right now with e-commerce and online business booming and kind of thriving and kind of showing that it's the way of the future in this digital economy. Commercial real estate for me is kind of like, I don't know. I don't know if it'll be here in 10, 15, or 20 years, and as a long-term investor, that's where my mind is at. But since this video is specifically about the best REIT you can buy, I firmly believe that O Realty and Realty Income is the absolute best you can buy, and I'm going to tell you just a few more reasons why I think so. Little disclaimer though before I dive into that, you know, your girl has her notes here. She's reading off her notes. She did her research. So if you would be so kind to give this video a damn thumbs up, it takes a lot of time, a lot of hours put into these videos. It would mean so damn much to me, and it really, truly helps this channel out an unreal amount. So please smash, tap, destroy, touch, whatever it is that you want to do with the little this, please do it. First order of business, Realty Income, O Realty, the monthly dividend company, has been introduced in 2020 as a dividend aristocrat. Let's give them a round of applause. And me being in the real estate industry as a realtor myself, it was actually very eye-opening for me, because when I really thought about it, the real estate market is always lagging behind the overall broader market. So like, for example, big events that affect the broader market negatively don't necessarily have that kind of impact on REITs and real estate right off the bat in general, because of the appreciation of real estate through time. And so for that, I mean, like I've said in other videos before, like real estate will always be real estate. Like, people always need somewhere to sleep and eat and shower. Although you could shower somewhere else, but you get what I'm saying. I am aware that is more residential real estate. Even with commercial real estate and things like warehouses and industrial type real estate, like those will still be needed to produce and ship and manufacture goods to people if e-commerce becomes the way and only way. So I think there is a little bit of security in real estate in general. Another reason why I love this stock is because of the caliber of tenants that it has. It has over 6,500 properties in the US, Puerto Rico, and the United Kingdom, they have heavy hitters. They have Home Depot, Dollar Tree, Walmart, LA Fitness, 7-Eleven, like really big companies in and of themselves. So the tenant diversification is awesome. Like these people are gonna pay their due. Like they can pay their rent. And I did a video before where I kind of went over the numbers of the rent that they're receiving. I think it was like 89% or 80, 90 something percent. I mean, long story short, even with the Rona situation going on here, they are still making a big chunk of their rent payments to Realty Income. So they're not missing it now. I find it really hard to believe that whatever else comes, I mean, our economy has basically been shut down for like 4 freaking months and they're still with it. They're still kicking. I don't know how much longer they can last, but where we currently are right now, they're doing all right. The next thing that I love about them is also a little bit backtracked into the whole dividend thing. They had 600 consecutive payments, okay, 600 consecutive month payments to you and us. We like that. Another home run by O Realty is the fact that they have over 630 different tenants and they have a 98.5% occupancy rate. I mean, that's a good number. Like I said, nobody's leaving. Like these big companies that rent out these spaces from them, they're not leaving. And the reason why is because of the next thing I want to talk about, which is their lease agreements. So the leases are triple net leases, 10 to 20 year contracts that they sign with these companies to rent out their properties. And what a triple net lease does is essentially the tenant is paying for like literally everything. Operating expense, taxes, maintenance, insurance, to lock them in for 10 or 20 years and to have a 98.5% occupancy rate. I mean, that is cash money coming in the bank. And then, you know, coming out to us in a sweet little dividend package every month. And you guys, just to kind of sum up, I mean, a lot of this information can be found on their website and on some other sites and stuff like that, but just go to their website and really dive into everything. They have an investors tab. You can really look at everything. I mean, if we're looking at it, I'll put up real quick on the screen, just kind of their track record over the years. They just continue to sustain their business and their dividends and their operation. It is the absolute best monthly paying dividend stock in any industry, in any sector. I personally feel like that you could put your money into. I know a lot of dividend investors really like SPHD as a monthly payer. I can't stand it. I don't like it. I already talked about that in one of my videos. I'll link it up here for you. You can go ahead and watch that. I would much rather put all of that money I had in there into O Realty before I bought SPHD. Granted, none of us, no one ever, not the fanciest, most intelligent analyst, nor the best, biggest YouTuber can tell you what the heck the market's gonna do or how the economy is going to go. So I cannot tell you for sure if this is a great buy, but just looking at what I know, I think it personally is. But that is my reminder to let y'all know, do not listen to me, do your own damn research. Never buy or sell or do whatever just because I say so. That should be a no-brainer in and of itself. But because we are living through this COVID pandemic, this Rona situation, and they are still up and running and thriving and making money and paying that dividend, I find it hard to believe that something else is gonna come crash that down anytime soon after this, and we'll just see what happens in the next couple years, I guess. With that being said, you guys, do you like O Realty? Is it your favorite monthly paying dividend stock? Let me know down below. Do you like it? Do you not like it because of the taxes? Is that even a factor for you? Please let me know down below. If you like a different monthly pay or more besides SPHD, let your girl know, okay? I make a list. I look into everything that you guys tell me to look into. If you have a stock on your brain that you want me to kind of deep dive into, like I mentioned, I'm thinking about doing some videos like that. So let me know down below what stocks you want me to deep dive for you. And as always, if you made it this far, please smash the damn thumbs up button. It means so damn much. I already talked about that. If you missed it before, you could do it again right now. And if you are this far in the video and you're not subscribed, just hit the damn button. I don't know what you are waiting for. And I'm gonna go ahead and give you some kisses now because that's how I do it. So come here. You guys are the realest MVPs. Do me a quick favor, and the video that's about to pop up in about 10 seconds, go ahead and click that, watch that. YouTube thinks you should. And as always, you guys, enjoy the journey, whatever your journey is. And always remember to do assess your hearts on fire. And I will catch y'all in my next video. Bye, guys.